Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, let's get in the management of Latent View Analytics. The IT companies, they continue to be in focus. So we have with us Mr. Rajan Sethuraman, who's the CEO of the company, joining us now for a quick business outlook. Mr. Sethuraman, good afternoon. Thanks a lot for joining us. Well, there's been so much talk about a possibility of a slowdown. We are speaking to other IT companies as well. What is it specifically for you? Is Latent View seeing any signs of slowdown?
So we are seeing some talk about budget cutbacks in the technology and in the automotive space, anything in the tune of 10 to 15, 20%. But these are overall budget cutbacks that those organizations are considering or thinking about. What we still don't have a full handle on is how much of this will flow through to analytics initiatives, and specifically what might be the impact of the work that we are doing. Also, in the past, as I mentioned, when the resources are in a constrained scenario, that's when organizations also look at using the power of analytics to figure out what to do and what not to do. So we want to wait and see how this unfolds right in the coming months.
So these clients, these enterprises who are talking about these 10 to 20% budget cuts that you referred to, these aren't your clients? Have any of your clients indicated that 2023, they may look to cut back, tighten the belt on tech spending?
Yeah, I'm talking about clients that we are working with as well.
All right. How many clients, sir, then?
So we have heard this in 2-3 accounts at this point in time. So it's not a whole lot. I mean, we're working with about 50 accounts. So out of that, about 4 of the accounts, we have heard some conversations around possibilities of budget cutbacks. But as I said, it's early days, right, in terms of how it will transpire in those accounts. And also, whether there'll be any ripple or effects in other accounts that you're working with.
Okay. So this is about what is happening at the industry level and particularly for your company as well. Post Q2, you had indicated that, yes, there are about 10 of the companies in early stages of discussions and analysis for an acquisition. Has anything been finalized in this regard? And right now, are the valuations attractive in the current scenario that we are in?
We haven't finalized anything. The valuation expectations are being tempered in light of the current scenario. And some of the conversations have progressed a little further in the last month and a half. But we are not near to closure on any of them. I mean, I'm expecting that we might get closer to a real action in the next quarter or so, quarter, 2 quarters. We are also being cautious given the external environment, right, in terms of what the real synergy benefits would be given the current situation. So conversations are on and we are progressing, but we are not anywhere near closure at this point in time.
So post Q2, you said that you were doing a due diligence of about 10 companies. Now, have you at least whittled out some of them? How many companies are you actively looking at? And should we expect you to close this acquisition in the first half of next calendar year?
So, yeah, we have whittled down. So some of them have been filtered out, but there are others who have been added into the evaluation pool. There are 2 or 3 which are a little bit more interesting, right, in terms of the number of conversations that we have had. Yeah, first half of next year looks like a likely scenario at this time. But as I said earlier, we don't want to rush in and do something that doesn't make sense to us. So we will go through the due diligence process on the ones that meet our initial criteria, and then we'll fructify them, right, based on how all the factors considered, right, turn out in our evaluation.
We do take your point there, and we'll not be asking you the amount or a specific name, but just more details. Since your the maximum revenues coming from US, you were increasing efforts in Europe plus India. Will it be somewhere in those geographies then?
Yeah, definitely the acquisition opportunities we are considering have either a strong market presence or a strong base, right, in one of these 3 geographies, the US, Europe, as well as India. Now, India being a fairly important aspect, right, from a supply perspective. So definitely the focus will be on those markets. Opportunities that will help us leapfrog in Europe will be particularly attractive. So there are a few like that as well on the table that we are considering at this time.
So getting back to that point about slowdown, a potential budget cut is going to impact your revenues only in FY24. Can you talk about the near term? What's happening right now? Are we seeing higher furloughs? And therefore, what will the second half of the year look like? And in which areas are we seeing higher furloughs?
So we have heard of, there is one account that we've been working with in the past where furloughs were anyway the order of the day in the third quarter, our third quarter. So that's not a surprise because that is something that they were doing even prior to the pandemic. There is one account in the automotive space where we are hearing talks of a furlough, right? There is a possibility, but they're also talking about how some of that can be pulled back in the first quarter or second quarter of the next year. So beyond that, we haven't heard any particular request for furloughs this time out of the client base that we are currently working with. We will have to see whether there are any particular requests that come, right, in terms of maybe slowing down a few initiatives and then ramping up, right, as the year progresses. I'm expecting that some of the uncertainty that's there in the minds of the clients will also start getting resolved, right, by first quarter, and at which point in time we are kind of starting to look at FY24. So more clarity will emerge in the February-March timeframe.
So as of now, there is nothing which is going to slow down your revenue, right? There are only talks. There has been no concrete action. There is no deal cancellation, no deal deferral, nothing.
Nothing at this time. I mean,
so what is cancellation. All right. What's the second half of the year growth looking like?
So I think we will. I mean, we did about 33% last year. I mean, it's going to be lower than that given the economic trajectory at this time and the time frame for some of the conversations that we are currently having. There are two reasons. One is the conversations are larger, so more stakeholders are involved. So some of these things will take a little longer to fructify. Secondly, we are.
Okay, that line has frozen, but interesting takeaways coming in from Latent View Analytics. And now increasingly in the conversations, at least, you are hearing caution seeping in from the management commentary. You know, when we spoke to all these companies post their Q2 numbers, so which was basically in October because IT companies usually report their numbers first up, they're saying, you know, the clients are seeing the headlines. They're also reading there is a potential of recession. But as of now, there is no talk. But this is the first time now a lot of companies are one after the other talking about that, you know, there are conversations about a potential budget cuts. You are seeing some sort of a deal cancellation, not cancellation, but at least a slowdown in decision making, etc. Some companies taking higher furloughs than what they typically do. So it does appear the lay of the land has changed a bit in the last, 1 month compared to what it was, say, in October. So that's Latent View Analytics telling us that there is one client in the automotive space who is considering higher furloughs in Q3 in the month of December, but there is a possibility that even if they do furloughs in Q3, that work may be pushed to Q2. And he said 4 out of their 50 clients. So we're talking about a good high single-digit kind of contribution, perhaps to, I can't say in contribution in terms of revenues, but 4 out of their 50 clients are talking about the possibility of a 10 to 20% budget cut. So let's see how this plays out. Get into a break. We'll come back with our special segment, Midcap Spotlight.
आग को फैलने से रोकना मुश्किल है,